What's up, y'all? It's Nick with iLight Investments, and I'm back today with another video a little different than the ones I've been making in the past. I really have been on a journey this past year to grow my knowledge and my understanding in investments into the stock market. And that's been a very interesting journey, to say the least. I've learned a lot of lessons, and I feel like I'm finally at a point where I've solidified the core positions in my portfolio that I'm looking to grow over the next 2 to 3 decades and really join in on the FIRE movement that's been happening across the nation. For those of you who aren't familiar, FIRE stands for Financial Independence, Retire Early. And I'm really focused on the financial independence part of that movement. Retirement to me doesn't necessarily look like I'm not working in my later years, but more so I have a choice about how I want to work, when I want to work, and what I want to work on. And to me, that is freeing. And that's what I am looking to achieve with this portfolio. This 3-fund portfolio consists of 3 ETFs, and they each have a core focus in building out my positions. The first one that I'm going to go over is QQQM. And for those of you who are not familiar, QQQM is the growth position of my portfolio. It's the Invesco NASDAQ 100 ETF, and it's an exchange traded fund that is based on the NASDAQ 100 index. It's passively managed to track a modified market cap weighted narrow index of the 100 NASDAQ listed stocks, excluding the financials. You can see they have $36.67 billion in assets under management. Their expense ratio is 0.15%, which it's on the higher side of a passively managed fund. However, because of the way they manage this fund, I'm willing to pay this expense ratio every year because of the amount that I'm going to get back, the value I'm going to get back from this ETF. The PE ratio, price to earnings, is 41.51, which is pretty good. They have a dividend of $1.35 per share, which is about 0.66%. Their payout ratio is 26.75%, which is also really good. And you can see their 1-year return is 28.90%. So it's a really good fund. I'm going to go ahead and look at the holdings with you all. You can see it holds some of these top stocks that are really making an influence in the market. Nvidia at 8.71% at the date of recording, Apple at 8.31%, Microsoft at 7.68%, followed up by Amazon and Broadcom, along with Meta, Tesla, Costco, and Google rounding out the top 10. Those are some great performers. They've been great performers in the market the past few years, and I'm looking to capitalize off of their performance. Now, this is my growth position, and I kind of want to talk about why it's my growth position. It is heavily influenced by tech right now. However, it is diversified enough to where if and when tech is underperforming and there's other areas of the market that are overperforming, it will be able to pick up those areas of the market that are performing well. So for example, it's diversified in healthcare, consumer staples and consumer discretionary make up other points of it. So I like it because of that. It's not in and of itself a tech ETF. However, it does benefit from the technology and AI boom that's been happening. A little bit about the dividends. You can see it pays out quarterly every December, March, June, and September. It has a dividend growth rate of 36.51%. This is over the past 5 years, it looks like. Again, that dividend yield of 0.66%, which is going to be growing. And if we want to look at how the charts look over the past 10 years, it looks like it only has 5 years maybe. Okay, over the past 5 years, you can see they've been increasing their dividend over time, which is good to see. So I'm super excited about having this in the second position in my portfolio and in my core position specifically that I want to focus on is SPLG. This right here is the SPDR portfolio S&P 500 ETF. It's an ETF based on the S&P 500 index, and it tracks a market cap weight index of 500 large and mid-cap U.S. companies selected by the Standard & Poor's Committee. You can see it has 51.43 billion assets under management and a very, very low expense ratio of 0.02%. That's one of the reasons why I chose this as my core position in my portfolio. This is the one that all the other positions are going to be built around, and the one that's going to hold solid and true over time as the market continues to fluctuate. It has a PE ratio of 29.88, and then it has a dividend yield of 1.25%, as well as a 37% payout ratio. You can see some of these top holdings are very similar to the ones in QQQM. You can see it has Nvidia, Apple, Microsoft, and Amazon as its top 4 positions, along with Meta, Google, Tesla, Berkshire Hathaway, and Broadcom rounding out its top 10. And its dividends are looking good as well. Annual dividend is 86 cents, and it's an 8.98% dividend growth rate over the past 5 years. We can look and see that it has been growing since 2015. So this one's a 10-year. It's good to see. Oh, the reason why QQQM didn't show 10 years because it was launched in 2021, I believe. So it doesn't have 10 years worth of track record data. That's why I didn't show it there. But this one shows 10 years starting at 43 cents back in December 19th of 2014, all the way up to 86 cents September 3rd of 2024, which is what its last payout was. So you can see that it really has been growing its dividends, and looking 30 years into the future, this is only going to continue to increase. My third position in my core positions of my portfolio is the dividend position. This is the position that's going to be paying me out a dividend every quarter, and I want this dividend to continue to grow in order to be able to become financially independent and retire early a lot sooner than the average retirement age. So I'm choosing Schwab's US Dividend Equity ETF, or SCHD. It's based on the Dow Jones US Dividend 100 Index, and it's a market cap weighted index of 100 dividend paying US equities. It has 65.89 billion assets under management and a fairly good expense ratio at 0.06%. You can see that the dividend yield is 3.42% and the payout ratio is 18.58%. Now, these holdings are going to look a lot different than the first two. This is my defense position in the market. These top 10, Cisco, Bristol Myers, BlackRock, Home Depot, Chevron, Texas Instrument, Verizon, Lockheed Martin, UPS, Altria. These positions are really high value companies that's been in the market for a long time, and they pay out a solid dividend that continues to grow. And they don't waver as much as some of my other positions when the market fluctuates. It's a lot more of a steady position, and it's the part of my portfolio that's going to keep my portfolio steady as the market fluctuates. So it might not have as much growth as my other positions, but it won't have as much downside when the market takes a downturn. And I need that in my portfolio to balance out the growth and core positions. You can see again, the dividend yield is 3.42% with a 98-cent per share dividend payout. And the dividend growth is 11.94%. And that's, I believe, over the past, let me see if it does 10 years, probably 5 years, it looks like. So we have for this. So you can see that in December of 2019, about 5 years ago, it was paying a 57-cent dividend per share. And now in September 25th, it paid out a 97, maybe 98 dividend. So amazing growth here as well for the dividends. So those are a little bit about the 3 fund portfolio that I'm looking to implement and build my share size in. I've built out a tracker tool that shows and helps me keep track of my short-term strategy, my core position status, and then my long-term strategy for growth when it comes to this portfolio. I'm going to walk you through it briefly, and I want to do, ideally, if not weekly, maybe every other week, do an update on how my progress to date is going. So in the short term, my 1-year strategy, I have a share goal right here you can see for each of the 3 ETFs, 30, 75, and 85. You can see my current shares, right, with QQQM just under 9, SPLG is around 12, and SCHD is around 22 and a half shares. It also shows how many shares I have left to reach this goal. And it also shows my contribution goal for the year. right? So I started this back in September very loosely. I wasn't really talking about it as much because I was still trying to get set on the 3 funds, but I was investing in QQQM since back in September. You can see the allocation right here, and that should be 40-40-20. This is building off of another sheet that I have, but it's pretty much 40-40-20. I have my current contributions, how much I have left to contribute for the year, rounding out till September, and then my percent towards my goal, as well as for contributions and shares. And again, these are all in my brokerage account. So this is my brokerage account. I do have a Roth 403B. I do have a Roth IRA. I have my high yield savings account and my health savings account. So I do have a number of other accounts that I am investing in every month. This one, though, is covering my brokerage, and it's only covering these 3 TFs within my brokerage. I have other positions, I think about 12 total in my brokerage account, and I'm trying to condense it to 10. But the strategy in the short term is to auto invest $100 a week into QQQM and SPLG, and auto invest $50 a week into SCHD. That comes out to about $1,000 every month that I'm investing into this 3 fund portfolio, or about $12,000 a year. And I have my long-term strategy so you can see how it fits in, that I'll go over a little later. But you can see my goal allocation, right, it's really growth oriented, with 40% into QQQM, about 40% into SPLG, and about 20% into SCHD. Currently, I have about 56.2% into QQQM, so it is a little over leveraged, and I will be building out my SPLG share size to get it closer to that 40%. But SCHD is more or less on the money at 19.5% right now. I then have right here, you can see my contribution and shares goal. So I can look at my progress to goal every time a contribution is made, and every time that auto investment into my Fidelity account for those securities is executed. I can see that growth as well. And you can see QQQM has made quite a bit of strides, as well as SCHD and SPLG. I'm going to be picking that up a little bit. So it's helping me see where I need to focus on in my portfolio. Now, just a little bit about this sheet. I will be making some updates. This is really my first draft at it. And as I continue to refine how I want to track my progress and what type of tools help me the most, I will be refining how this is displayed on this sheet. But for now, this makes sense to me. This tells me everything I need to know to be on top of my portfolio. So it's working for me in the short term. And if you have any ideas, let me know in the comments or down below. I can potentially add that. If you have any ideas about other things I can track or add, I'd love to hear from you about it. So moving on to the core position current stats. This is what's tracked more on the day-to-day. This is more of my short term, which tracked over the year. And this is more on the day-to-day, week-to-week, month-to-month. I can get those updates. So I have the ticker symbol here. I have all my current shares owned. I have my 52-week low, or the 52-week low and 52-week high of each security, and the range. So you can see that QQQM they're all kind of close to their 52-week high. QQQM having a bit of a pullback the past week from 212 to its current price of 204.11. It's had about a $5.23 change since yesterday. This is a daily change, or 2.5% change. And the reason why I have this on here is because this allows me to see on the day-to-day, week-to-week, where do I want to add a little extra funds that come my way. And so it's always good to buy on a discount, buy on a red day. And that's what I plan on doing in this account. So today will be a great day. I actually did have my auto investments come out and purchase all 3 of these securities. It'd be great to buy a little more QQQM because it is down 2.5%. You can see the daily change right here, my market value, how many dividends I've written. Again, I just started this portfolio, so I've only received one whole dollar, exactly $1 in my Fidelity account for my securities. And then you can see the dividend yield, the annual dividend income per share, and then the total annual dividend amount. So right now I'm making about $34.26 every year based off my portfolio. It also shows information like market return, total return, when this information was last updated, my portfolio value, and then the dividend payout frequency, as well as the next dividend payout. And this is really important to me because I can see that for QQQM, for example, I think this might actually be out of date. Excuse me, all. This is also, I need to update this. So go ahead and move that up. So you can see because all three of my core positions are on the March, June, September, and December payout frequency, the next dividend payout for each of these will be December of 2024. I might add on here an estimated dividend amount per share or total that I might receive. I'm going to play around with some formulas and potentially add that, because that'll be good to know as well. How much do I expect to receive with this next dividend payout? And then down below, I'm pulling in some ticker data to show the 7-day and 30-day close dates. And this updates every day. So it shows the last 30-day where the ETF has closed. And I created a simple line chart that shows the 7-day average and change. You can see QQQM is down 3.74% over the past 7 days. And then you can see over the past 30 days, where is it? So that's helpful for me to just be able to get a quick glance. How has it been performing over the past 7 days? How has it been performing over the past 30 days? It's the same for SPLG and the same for SCHD as well. And then down here is my core position long-term strategy. So it's based off of MarketBeat Data's dividend and growth calculator. I just did my own calculations into my own spreadsheet because it's easier for me to play around with the numbers and adjust accordingly. But essentially, this is telling me 35 years out, year over year, based on how many shares I have owned, based on the share price, my annual contributions, my annual dividend yield, growth rate, share price appreciation, et cetera, expense ratio, contribution, and inflation, which is another number I calculate in here, and then my payout per year. Where is my portfolio going to be year over year? And again, this is not taking in market fluctuations, right? There's going to be years where each is going to be down. There's going to be years where they're going to be overperforming. This is just on average. And I've built this out year over year for both QQQM. You can see my shares that I expect to own as the years grow, my annual dividend per share, total annual dividend, my contributions every year. So again, I want to grow my contributions by 5% every year to keep up with inflation, right? Inflation is 3 to 5%. I want to make sure I'm investing an additional 5% to make up for that inflation every year. And then stock price projections, and then inflation and expense, after inflation and expense ratios. Where do I see these shares, right? In this amount, right? And then age. And then I have it for SCHD. And again, I can adjust these accordingly. So if I wanted to see it for, if I didn't calculate inflation, I can change it. If I change my annual contribution increase, right, I can adjust those to see the changes. But right here is kind of the combined totals for all three of these ETFs within this core portfolio position. So, and I need to adjust this a little bit. I want the age to kind of match up a little bit more. I realized it had moved when I added a couple of other fields. But essentially, some key areas that I'm looking out for and some key benchmarks for me to take notice of so I can understand my FIRE number is, one, age 37 is a huge milestone, right? That's going to be, I believe, 5 years from now. I would have in this specific account a total growth of over $100,000. So that's going to be really, really, really important for me and really exciting to see. Sorry, there's also something going on with these formulas. L62, L99, L136. 62. Yeah, okay, that should be odd. Okay, after I adjusted my combined contributions, you can see there are some key metrics on my path to financial independence when it comes to this 3-fund portfolio. So one of the key benchmarks is in about 5 years, at the age of 37, I'll have accumulated over $100,000 of portfolio value in this portfolio. And then if we look 13 years down the line, at age 45, I'll be making about $500 a month off of this portfolio, which is great. In about 15 years, I'll have $10,000 of combined total dividend annual income coming in. And this is before taxes. So I probably should do the after tax one because that one will be more meaningful. So we'll go ahead and change that actually to 48. Because you can see right here, 48 is actually the year where I'm making $10,000 a year after taxes. So I'll adjust that. But go ahead and move down to age 50 where I'm making $1,000 a month, which is another milestone. And then 52, I'll be making $1 million. This portfolio value would be at $1 million, which is absolutely insane. Again, these are projections. None of this is financial advice and none of this is set in stone. This is just based off of past performance and some math and calculations. Now, the number that's the most important to me and the one that shows that I have that cash flow coming in, that real cash flow where I can actually start pulling from this account to fund my monthly expenses, is at age 58, which is when I'll be bringing in just under $3,500 a month from this portfolio. Now, this is the cash flow number because at this point, my passive income from this portfolio would be valued at more than what my expenses are on a monthly basis, right? So the money I'm bringing in passively is more than my monthly expenses. And this doesn't necessarily account for inflation. Right now my main monthly expenses are rent, food, transportation, medical. Those are like some of my main things. But given where I am now and doing these projections, 58 is that financial independence year. And this is good to know because it lets me know that I need to figure out how to accelerate this a bit in order to reach this number sooner. 59 and a half is when I can start pulling from retirement. So ideally, I'd want to have 5 to 7 years of the ability to retire early, essentially, or achieve financial independence early before the age that I'm able to withdraw my contributions from my retirement accounts. So I'm going to play with these numbers a little bit more. I'm going to keep on this path right now and then continue to see opportunities to adjust, right? Maybe there's a year where I get a good bonus. Maybe there's, some side hustles that I pick up that can help me accelerate my contributions, right? Tax refunds, those are also opportunities as well. So I'm going to be looking at these numbers closely and seeing ways that I can continue to improve my strategy and plan. But you can see right here too, at age 65, I'll be making $100,000, over $100,000 a year after tax in this account. So, and then right here, you can see the 12,000, this is year one. That's my 1 year goal right here, the 12,000. So 1 year one of this strategy, this is the short term that's based off of this long-term strategy. And I'm going to keep taking it year by year, quarter by quarter, month by month, day by day. And I'm looking forward to updating you all around this journey, my progress. And, this is not anything that's set in stone in the sense of life changes, my goals and priorities may change, but these core values will still ring true. The market is the best place to get your biggest returns and to really make your money grow. And I'm looking forward to taking advantage of that over these next few decades. So this is a little bit about my plans. Again, hopefully I'll have some ideas about how to continue to refine my portfolio tool. And if you have any ideas, drop them down in the comments. I love to hear. But hey, that's it for today. Thank you all.